Welcome to Market Brief, After Hours. It has been a fascinating day on Wall Street and, frankly, across global markets. We are seeing a real tug of war right now. On one side, we have equities extending their gains, pushing indices into the green for 2026. But on the other side, there is this underlying caution. We are looking at slowing economic growth, incredibly fragile geopolitical conditions, and a lot of uncertainty surrounding a potential U.S.-Iran ceasefire. To unpack all of this, let's dive right into the numbers and the narratives driving them. It's great to have you in the studio to break this down.
It is great to be here. You hit the nail on the head with that tug-of-war analogy. The markets are definitely supported by momentum right now, but they are absolutely constrained by an uncertain outlook. Investors are trying to balance the excitement of a rally against some pretty sobering macroeconomic realities.
Let's start with that rally, specifically in the U.S. The Dow has actually turned positive for the year, which is a major milestone given the recent volatility. Can you walk us through where the major U.S. indices landed today?
Absolutely. We saw a really solid back-to-back performance today, the strongest since April of last year. Looking at the Dow Jones Industrial Average, it rose 0.58% to close at 48,186. That specific move is what pushed the index into positive territory for the year, sitting at plus 0.25%.
And what about the broader market and the tech sector?
The S&P 500 climbed 0.62% to finish at 6,825. What was interesting there is that we saw investors rotating into both growth and defensive sectors. For example, Meta surged 2.6% after debuting a new AI model, but we also saw defensive plays like Walmart and utilities like American Electric Power moving higher. As for the tech-heavy Nasdaq Composite, it led the pack, adding 0.83% to close at 22,822. That really reflects this unstoppable investor appetite for AI-driven growth, even with all the macro noise in the background.
Those are impressive numbers, especially with the Nasdaq outperforming again. But you mentioned the macro noise, and we cannot ignore the economic backdrop. GDP growth for the fourth quarter of 2025 was just revised sharply lower to 0.5%. Meanwhile, core inflation is holding at 3%, which is still above the Fed's 2% target. When you combine softer growth with sticky inflation and rising oil prices, the stagflation word starts getting thrown around.
It does, and stagflation is essentially the boogeyman of economics right now. We are looking at a scenario where the economy is cooling, that 0.5% GDP revision really highlights weaker investment, but prices are staying high. The core PCE price index rising 3% year-on-year and headline inflation at 2.8% shows that price pressures are elevated, and this was all ahead of the recent surge in oil prices.
Speaking of oil, the energy markets are clearly on edge because of the geopolitical situation. Shipping activity through the Strait of Hormuz is still disrupted. Where did oil settle today?
Oil remains very elevated, even though it pulled back slightly from its intraday highs. U.S. crude settled above $97 a barrel. West Texas Intermediate rose more than 3% to $97.87, and Brent gained over 1% to $95.92. At one point today, prices actually surged above $100 a barrel because of those shipping disruptions you mentioned. The gains only moderated after Israel signaled a willingness to negotiate with Lebanon, which eased some immediate fears, but the supply expectations remain very tight.
It seems like the geopolitical tension is impacting markets differently depending on the region. The U.S. market rallied, but looking across the Atlantic, European markets didn't share that optimism today.
No, they certainly did not. European equities actually slipped as doubts grew over the durability of the U.S.-Iran truce. The broader STOXX 600 was down 0.4%. Looking at specific countries, Germany's DAX took a hit, falling 1.1% to 23,007, which reversed a chunk of its massive 5.1% rally from the previous session. France's CAC 40 declined 0.2% to 8246, and the UK's FTSE 100 slipped 0.28% to 10,579. Travel stocks were a big drag there, with Lufthansa and TUI both down significantly.
Were there any bright spots in Europe?
There were a couple of outliers bucking the trend. Italy's FTSE MIB managed to rise 0.5% to 47,328, and Switzerland's SMI gained 0.35%. But overall, the mood in Europe was definitely weighed down by ceasefire doubts and some mixed economic data, like the UK housing market showing weakness.
It is a complex picture to paint. We are going to take a quick break, but when we come back, we will dive into the currency markets, where moving averages are telling a fascinating story, and we'll break down today's biggest individual stock movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the major indices and the geopolitical tensions weighing on energy and European markets. Let's shift gears to Forex and commodities. There was some major technical action today, specifically around moving averages. Let's start with the euro.
The currency markets were highly technical today, and the euro had a very constructive session. Euro USD closed at 1.1707, rising 0.38%. What is really important here is that buyers regained control after an early dip, and the price pushed above a massive cluster of moving averages. It cleared the 50-day simple moving average at 1.1677, the 100-day at 1.1687, and the 200-day at 1.1672. When you have all three of those major averages clustered together like that, breaking above them signals a very positive shift in short-term momentum.
So it is transitioning out of that consolidation phase we've seen since late 2025. Did the British pound see a similar technical breakout?
It did. GBP USD ended the session at 1.3442, up 0.35%. Just like the euro, the pound reclaimed its key moving averages. It crossed the 50-day at 1.3440, the 100-day at 1.3422, and the 200-day at 1.3416. This convergence of levels is providing a really strong supportive base. It looks like a developing shift from its previous corrective phase, especially since it formed a higher low near 1.3190.
And the Australian dollar? It has been on an uptrend for a while now.
Yes, the Aussie dollar is extending that uptrend beautifully. AUD-USD closed at 0.7085, gaining a solid 0.61%. It remains comfortably above its 50-day moving average at 0.7024, its 100-day at 0.6848, and its 200-day at 0.6692. All three of those averages are trending higher, which confirms a firmly established bullish trend. The sequence of higher highs and higher lows is very much intact.
Let's look at precious metals. Gold and silver both saw some strong bullish action today, following some recent volatility. Where are the technicals sitting for the metals?
Gold had a great rebound, closing at $4,772, which is up 1.11%. It is currently sitting below its 50-day moving average, which is up at $4,924, but it is holding strong above the 100-day at $4,656 and the 200-day at $4,146. Both of those longer-term averages are trending higher, so the long-term bullish structure is totally intact. Buyers are clearly stepping in to defend those support levels.
And silver actually outperformed gold today on a percentage basis, right?
Exactly. Silver shot up 2.18% to close at $75.71. It moved above its 100-day moving average at $75.60. It is still below the 50-day at $80.83, but it is sitting well above the 200-day moving average at $59. The momentum there is definitely building, and the structure looks very constructive following its rebound from the early April lows.
Fantastic breakdown of the technicals. Let's wrap up today's show by looking at some individual market movers. There were some massive swings in single stocks today, starting with Simply Good Foods. A pretty brutal day for them.
Brutal is the right word. Shares of the health food manufacturer plummeted 18%. They reported fiscal results and future guidance that just significantly trailed what the market was expecting. When you miss on both the current quarter and the forward outlook in this kind of cautious market environment, investors are going to head for the exits quickly.
On the flip side, Brown-Forman had a stellar day. A 13% jump is huge for a legacy spirits company.
It is a massive move. The Jack Daniel's producers surged 13% on M&A chatter. There are reports that Sazerac has expressed interest in a potential deal. This comes after earlier merger talks with Pernod Ricard, so it is clear that Brown-Forman is in play and the market is pricing in an acquisition premium.
M&A activity is always a great catalyst. We saw similar action in the real estate sector today with Whitestone REIT.
Yes, Whitestone REIT climbed over 11%. They announced a definitive agreement to be acquired by Heirs Real Estate Funds. It is a deal valued at $1.7 billion, so a very clean, confirmed acquisition bounce for that stock.
Finally, we have to touch on cybersecurity. Zscaler led a pretty significant sell-off in that sector.
Zscaler dropped 11% today following a broker downgrade.
And in the tech world, especially in high multiple sectors like cloud security, weakness in one name tends to drag down the whole peer group. We saw companies like Okta and CrowdStrike move lower as well. Investors are really starting to reassess valuations in that space.
It really highlights the transitional phase the market is in right now. We are seeing optimism driving these short-term gains, pushing indices like the Dow into positive territory for the year. But the conviction is fragile. It is highly dependent on whether we get clear confirmation that these geopolitical tensions are easing, and that the economic headwinds, like sticky inflation and slowing growth, are actually subsiding.
That is exactly the dynamic at play. The market wants to price in improving conditions, but the resilient labor data, like initial jobless claims ticking up slightly to 219,000, but remaining historically low, shows the economy isn't breaking yet. However, that limits the Fed's ability to offer sustained policy support. Until the fog clears on energy supply disruptions and inflation, we are going to see this cautious optimism continue to wrestle with underlying risks.
A perfect summary of a highly complex trading day. Thank you for walking us through all of it. That brings us to the end of today's deep dive. If you found this useful, please follow Market Brief after hours.